I'm going to start this video by saying something that might surprise you coming from a 19-year real estate investor. Stocks are a legitimate wealth building tool. The stock market has generated average annual returns of 7 to 10% historically. Index fund investing is simple, passive, and accessible to anyone with a brokerage account. Having said that, 90% of American millionaires built part or all of their wealth through real estate. Not stocks, not index funds, real estate. In this video, I'm going to give you an honest comparison of both asset classes: returns, risk, control, leverage, tax treatment, and income, so you can make an informed decision about where your capital belongs. My name is Puglisi. Let's find out. Stock market returns average 7 to 10% annually over long periods. That is the real headline number for a diversified index fund held over decades. The key differentiator for real estate is leverage. When you buy a stock, you pay full price. When you buy real estate, you can put 10 to 25% down and control 100% of an appreciating asset. Real numbers: $100,000 stock investment that appreciates 10% generates $10,000, a 10% return on your capital. A $100,000 down payment on a $400,000 property that appreciates 5% generates $20,000, a 20% return on your invested capital. Same market conditions, the leverage changes the math entirely. In the stock market, you're a passenger. A company CEO makes a bad decision, your investment suffers, and you have no recourse. In real estate, you are the driver. You can renovate and force appreciation. You can improve management and increase cash flow. You can negotiate the purchase price and the terms. You make the decisions that directly impact your investment's value. That control premium is one of the most underappreciated advantages of real estate investing. Stock market crashes of 30 to 50% have occurred multiple times in recent decades, wiping out years of gains in months. Real estate declines are generally slower and less severe. A rental property that cash flows positively generates income regardless of whether its market value has temporarily declined. And risk management in real estate is more within your control. Proper due diligence, conservative underwriting, and multiple exit strategies reduce downside in ways that stock investing simply cannot replicate. The tax code treats real estate investors significantly more favorably than stock investors. Depreciation allows real estate investors to show paper losses that offset rental income, even while the property appreciates. The 1031 exchange allows indefinite deferral of capital gains. There is no equivalent mechanism for stock investors. Every sale of appreciated stock triggers a taxable event. The combination of depreciation, deductible expenses, and 1031 exchange capability gives real estate investors a meaningful, lower effective tax rate than stock investors with equivalent returns. Stocks generate income through dividends. If the company pays them, dividend yields on most stocks are 1 to 3%. Real estate generates rental income, cash flow you control through property selection, management decisions, and rent setting. A well-selected rental portfolio generating 6 to 8% cash-on-cash returns produces meaningfully more income than a divided portfolio of equivalent size, while also benefiting from appreciation, equity buildup, and tax advantages that dividends do not provide. Real estate wins the comparison for investors who are willing to be active participants in their own wealth building. The leverage, the control, the tax advantages, and the multiple simultaneous income streams make it the superior wealth building vehicle for investors who engage with it seriously. Stocks win for investors who want true passivity. Set it and forget it index fund investing that requires no knowledge, no management, and no active involvement. The best answer for most investors is not either or. It's a foundation of real estate for wealth building, cash flow, and tax efficiency, alongside a stock portfolio for liquidity and passive diversification. But if you're going to be active, if you're going to invest time and knowledge in building wealth, real estate is where that effort compounds more powerfully. That is why 90% of millionaires got there through real estate. And it's why Debbie and I have spent 19 years investing in it. Start with the free 5-day real estate challenge. Understand the strategies, the math, and the path before you commit a dollar. Click on the link in the description. Zero cost. What you're seeing is artificial intelligence. What you're hearing is 19 years of very real experience. Hit subscribe for weekly content. Drop a comment. Are you currently investing in stocks, real estate, both, or neither? And what's driving that decision? I read every comment.